Good morning, friends. Welcome to the SBI Securities morning podcast. In today's podcast, we'll be discussing what to expect in Nifty and Bank Nifty from here on, along with the key levels for both the indices. We'll also be discussing on the key sectors and stocks that we should be focusing for the day and the next few trading sessions. First up, let's discuss regarding the global markets. So in the US markets in trade yesterday, we had a mixed trading session. The tech-heavy Nasdaq witnessed a gain of 0.56%, while the Dow ended down with a cut of 0.3%. The S&P 500 has taken support near its 20-day EMA level and witnessed a rebound. It has ended above 5,283 level with a gain of 0.11%. Going ahead, any substantial move above the levels of 5,300 will lead to a sharp upside rally up to the levels of 5,380 followed by 5,450 levels. Brent crude, if we see, has given a 21-day consolidation breakdown on the daily scale. It has tumbled by nearly 4% as OPEC plans to phase out the voluntary production cut. If we look at the dollar index, so the dollar index, that is DXY, has also slipped below its 100 and 200-day EMA level. Going ahead, any substantial move above the levels of 104 will lead to an extension of the correction up to 103.50 levels. Now coming to the update regarding our markets. So we have the crucial outcome of the general elections today. The verdict should be relatively clear by around 1 p.m. Coming to the update yesterday. So yesterday the benchmark index witnessed a strong gap up opening and thereafter witnessed a minor profit booking. However, the index has formed a strong base near 23,060 level and it has witnessed a continuation of its northward journey. Most noteworthy, if we see, the index has marked a fresh all-time high ahead of the general election results. It has ended about 23,250 mark with a substantial gain of over 3%. On the daily scale, if we see, it has formed a small body candle with a long lower shadow. The long lower shadow indicates buying interest at lower levels. As the index is trading at an all-time high, all the moving averages and momentum-based indicators suggest strong bullish momentum. On the derivative front, if we see, the June futures has surged by 3.12% and the cumulative open interest of the current, next and far series has dipped by 2.89%, which indicates overall short covering rally. Among the constituents of the Nifty index, if we see, 16 stocks have witnessed long built up, 26 stocks have witnessed a short covering rally, while 8 stocks have witnessed short built up and none of the stocks have witnessed long unwinding. If we see the current weekly expiry, the PCR is at 0.89, while for the June expiry, the PCR is at 1.22. 23,500 strike has significant call open interest followed by 24,000 strike. While on the put side, if we see, 23,000 has significant open interest followed by 22,500 strike. Going ahead, any substantial move above the levels of 23,350 will lead to an upside rally towards the mark of 23,500 followed by 23,800 levels. While on the downside, if we see, the zone of 23,060, 23,000 is likely to provide cushion in case of any immediate decline. Now coming to Bank Nifty. So in trade yesterday, the Bank Nifty has outperformed the frontline indices and ended near the psychological level of 51,000 with a robust gain of over 4%. On the daily scale, it has formed a small body bullish candle with a long lower shadow. It has also marked a fresh all-time high yesterday and currently the index is trading above its short-term and long-term moving averages. The daily RSI is in super bullish zone and it is in a rising trajectory. On the derivative front, if we see, the June futures has surged by 3.91% and the cumulative open interest of the current, next and far series has surged by 2.03%, which indicates overall long built up. If we see the derivative data, 51,000 strike has significant call open interest followed by 51,500 strike, and on the put side we have 50,500 which has significant open interest followed by 50,000 strike. For the current weekly expiry, PCR is at 0.71, while for the June expiry we have PCR at 1.02. Going ahead, the index is likely to continue its positive momentum and test 51,600 followed by 52,000 levels in the short term, while on the downside 50,600, 50,500 will act as the immediate support. Now coming to the key market indicators. So yesterday we had the volatility index which witnessed a sharp cool off after the exit poll numbers. So it has tumbled by nearly 15% and ended below 21 mark. On the daily scale, it has formed a sizable bearish candle. Going ahead, any substantial move below the levels of 18.5 will lead to a decline in India VIX. The advanced decline ratio is largely tilted in favor of the advances in trade yesterday. Now coming to the key sectors. So in trade yesterday, all the sectoral indices ended on a positive note. We had Nifty PSU Bank, Nifty Oil and Gas and Nifty Realty which were the top gainers. Nifty PSU Bank has marked a fresh all-time high and formed a sizable bullish candle on the daily scale. We believe it is likely to continue its positive momentum and test the levels of 8,200 while on the downside the zone of 7,880, 7,850 will act as the immediate support for the index. Some of the other sectors which displayed good strength were Nifty CPSE, Nifty PSE, Nifty Realty, Nifty Bank and Nifty Financial Services. Now coming to the FI DI data. In trade yesterday, both FIs and DIs were net buyers to the tune of 6,850 crores and 1,913 crores respectively. FI long short ratio in index futures has improved from 14 to 28.26% on a net basis. This as FI has bought 1,21,423 index futures. On the stock futures front, FIs have bought to the tune of 74,843 contracts, while on the options front, FIs sold 1,31,246 call contracts and they simultaneously sold 2,09,41 put option contracts. That's an end of today's podcast. Thank you for regularly listening to our podcast. Wishing you all an energetic and happy trading session. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.